since its inception, this cryptocurrency, which is the granddaddy of all crypto, has gained 8.9 million% over the last decade. If you had invested $100 in Bitcoin in the past 10 years, you will be well over $1 million today. And I believe that's a very good way to preface what we're about to discuss. So to begin, if you could introduce yourself, Teeka, and tell us a little bit more about your role at DeFi Technologies, which you hold at other companies as well. Thank you.
Absolutely. Thank you for having me here. It's wonderful to be here. And I didn't know the previous speaker, McGinnis, had no idea that he had created that term FOMO. That's a term in the crypto world. I mean, we use it all the time. So absolutely wild. So I do two things right now. I advise a company called it's DeFi.tech. And what the company does is it creates exchange-traded products that allow investors to get direct access to decentralized protocols, but to do it through the stock market. So right now, it's very difficult if you're a regulated entity to get access to the crypto markets. Many companies and private pools of capital are just not allowed to custody or own a typical crypto asset. So what DeFi.tech is doing is essentially creating regulated entities that trade on stock exchanges that will give you direct exposure to things like Bitcoin, Ethereum, Solana, Polkadot, and Cardano, and they can be held on a normal balance sheet by anybody that's allowed to own stocks. But what I'm really most famous for is writing investment newsletters. I write a letter called Palm Beach Confidential on the crypto markets. I've been heavily involved in the crypto market since 2016. I wrote, my first report was a report I wrote on Bitcoin, recommending it at $428 a coin. I followed up that report with a report on Ethereum when I recommended it at $9. And I come from a traditional Wall Street background. I worked at Lehman Brothers. I ran a hedge fund for many years. And when I first spoke to my friends in the industry about Bitcoin and Ethereum, friends would literally laugh at me on the phone. They said, that is magic internet money. You're going to destroy your career. You're an idiot for buying it. You're an even bigger idiot for telling people to buy it. And I said, okay, well, I'm going to be the idiot that buys Bitcoin and Ethereum, and I'm going to make my life about telling people to buy Bitcoin and Ethereum. And that's what I've been doing for the last 5 years.
Yes, you had the last laugh then, didn't you? It is bewildering to a large proportion of people out there, to the public. Could you explain what Bitcoin is, what cryptocurrency is, what DeFi is, and perhaps Ethereum and the blockchain, if you don't mind?
That's a massive question.
I know.
Okay, so I'm going to do my best to answer it. The first thing I'm going to do is talk about the blockchain. I'm going to talk about the Bitcoin blockchain. When I was first told about Bitcoin, it was in 2011. And to me, my Wall Street mind said, okay, this is a scam. This is a Ponzi scheme that has no value. And the fundamental mistake that I made at that time was that I didn't investigate the underlying technology behind Bitcoin that makes it work, and that is the blockchain. So what is a blockchain? At its simplest form, a blockchain is an Excel spreadsheet. It says who owns what, where they own it, and it records anytime there's a transaction between participants. Now you can say, well, how is that different from a traditional a way of storing data? Well, the traditional way of storing data is centralized, and that is fast and it's cheap, but it can create some enormous problems. So for instance, Wells Fargo has been fined hundreds of millions of dollars. Why? Because they would go into their centralized server and start changing data on people's forms in order to either put products into their accounts or to get them approved for mortgages that they never should have been approved for. Now, you can't do that on a blockchain. Now, why is that? So I'm going to give you a very basic overview of how a blockchain works. For those of you that are technical, please don't nail me to a cross on this. I can't go that deep, but I want to do a very simple example. So let's talk about the Bitcoin blockchain. Let's say I have 4 Bitcoin, you have 2 Bitcoin, and we have a transaction, and I try to send you 10 Bitcoin, but I don't have 10 Bitcoin. So how can I send it to you, right? Yes? Okay. So in a traditional centralized server world, let's say I'm a super hacker. I can hack the ledger of a centralized server, like in a bank,
Yeah.
and put 10 units of something in there and send them to you for a product. And then you don't find out till later that, you don't have the product. This is a scam that goes on all day long of people depositing money and then wiring it out. It's a classic double spend problem. Now, that can't happen on the Bitcoin blockchain, and here's why. On the Bitcoin blockchain, you have something on order of 10,000 separate machines that all have an identical copy of this Excel spreadsheet. Now, why does that matter? Why do you need to have 10,000 identical copies? Well, here's the beauty of a blockchain. So let's say I've now hacked one of those computers, and on that computer, it thinks that I have 10 BTC. And it's going to get ready to send you those 10 BTC. But then before it does that, it speaks to another node on the network and it says, hey, this guy's trying to send 10 BTC. Check your copy of the spreadsheet. Does he have 10 BTC? And that node will say, no, he doesn't. And then it will go and ask another node, and then another node, and then another node. And this continues to the point where the network says, no, this is a fraudulent transaction. And then it automatically gets ejected. There's no human that has to be there, which means that there's no human that can get paid off. This is all being done automatically. Once I understood the beauty of a design of a blockchain, I knew that this was a way that you could store, send, and append data, right? Secure data in a way that no one could abrogate. And that blew my mind, because in all of human history, that's never existed. We've always had a trusted, centralized third party. Our entire financial system, our entire human civilization is built on trusted third parties. And here was something that was going to completely eliminate that. And in that moment, when I saw that, when I learned that, which was in 2016, that's when I knew I had to dedicate my life to not only Bitcoin, but this entire blockchain industry, crypto industry, because it was going to be the future. It was going to and will transform everything.
It definitely will, with smart contracts as well. In your opinion, are we witnessing another episode of 1944's Bretton Woods moment? However, the difference this time is, irrespective of their stance, all governments voluntarily or involuntarily would have to be part of this because of Bitcoin's indomitable value and what it's going to become in the ensuing years?
Well, this is a good question. So remember, Bretton Woods was spearheaded by the United States, and when the rest of the world was absolutely destroyed by World War II. And nobody had a choice. You had to get in line, right? Because you had to do business with the United States. And so the United States says, okay, we're going to go to this new system, and it's going to be underpinned by the dollar. The thing to remember about Bretton Woods is that Bretton Woods was imposed upon the rest of the world. I think that Bitcoin is the free market version of Bretton Woods, meaning that market incentives will drive value to a new monetary base layer, a new fundamental reserve. And I believe that reserve will be Bitcoin. Now, that's not to say that the dollar will die. It absolutely will not. The dollar will thrive. But I see a system evolving where Bitcoin is the world's first voluntary reserve monetary base layer. And essentially that fiat currencies will act as, let's call it a de facto layer 2 solution. That's the solution where cash is very easy and very fast and very cheap to use. Bitcoin's just not very good to use in lieu of fiat. Fiat's much faster and much cheaper. So again, to reiterate that point, I think that the incentives are set up that the market will automatically revolve itself around building upon a new monetary base layer. And I think that base layer is Bitcoin. And what is so refreshing about this is that there's no CEO of Bitcoin, there's no president of Bitcoin with a big army behind him saying, adopt Bitcoin or die, or adopt Bitcoin, or we will completely kick you out of global trade. This is something, the incentives are so elegant and so beautiful that this is something that will automatically happen because it will be in the best interest of the most participants to adopt it.
I agree, yes. Fiat is fast and it's easy to print, hence all of the QE that we've been having. But the fact that we've gone off the gold standard, it makes it a little bit more easy for the government to just print as much money out there. So we'll get to see what happens later on. Could you talk to us a little bit about DeFi? DeFi is huge, it's compelling, and legacy financial institutions are scrambling to get into the game because they do not want to be left behind. How does DeFi impact the average Jane out there in the next year and 5 years to come?
I would say in the next year, it doesn't really matter at all to the average person out there. It's going to have no direct impact on them, and they probably won't pay attention to it for many, many years. And I would say, look, unless you're an investor, for most people, it doesn't, DeFi won't matter at all. Because it's similar if you had asked me about the impact of the TCP/IP protocol, the protocol that underlines the internet, when it was adopted by ARPANET in 1983. Well, if you'd asked me that in 1983, I said it's probably not going to affect a lot of people for a while, but if you're an investor, then you must pay attention to it. So I will say, if you are an investor, then the practical implications of TCP/IP mattered a lot. And the same is true of decentralized finance. Now, if you look at the adoption of TCP/IP, I mean, it took 20 years before it really got adopted and started to move the needle. DeFi, I believe, the adoption curve will be much faster than what you saw with the internet protocols. So, what I would say is, if you're an investor, then you need to know that DeFi is the future of finance. There's just no question. Anybody that debates that, there's nothing I can really do for them, and I'll tell you why I feel so adamant about this. The traditional financial system pulls out something like $8 trillion a year out of global GDP every single year in fees. And much of that cost has to do with these networks of intermediaries that have been set up, and it creates monumental layers of inefficiency, of huge cost, and enormous amounts of time. If we think about something as simple as moving money around the world, well, if you want to use the SWIFT system, it can take 3 to 5 days. You can lose a point, 2, 3 points in fees when you go from one currency to another. We've seen instances where people have moved $2 billion worth of Bitcoin, within an hour for 80 cents. So in the financial world, some areas that I think that are ripe for change, that DeFi is tailor-made to just smash open, things like trade settlement. So settling trades, banks are spending $20 billion a year on trade settlement. If you move everything to a blockchain through DeFi protocols, you can have immediate settlement, and the cost would be dramatically lower. Property loans, the average cost to originate a property loan is $7,000. Well, that's insane. But if you look at the reasons behind that, you have to have all the people that have to look at the paperwork. You have to prove your income. You have to do title searches. Once you start moving all those things to a blockchain, such as your reputation, your credit score, proof of your income, the property holdings themselves, then you can reduce and remove much of these expenses that are in the market. Another is credit. Right now, you have $7 trillion a year gets lent out. Commercial loan brokers charge between 1% to 6% a year on that money. So you're talking $70 to $420 billion a year in fees. Well, we now have a $100 billion loan market occurring on the internet, where the fees they're just tiny. They're tiny. So, if you look at capital markets underwriting, insurance, These are all massive markets that rely on trusted intermediaries and multiple layers of compliance that you can do away with in a DeFi world.
You're preaching to the choir. Couldn't agree more. I remember back when I used to work at a bank. If you wanted to transfer $100, you pay $40. If you wanted to transfer 100,000 or however how much it was, you're still paying that same $40. So DeFi is definitely the future. How do you explain the macro as well as micro impact of crypto on the global as well as local finance?
You're asking me some great questions that are. I don't want to give you a facile answer because these are big, deep questions. So I'm going to speak about the individual because the individual human is the person I built my career around helping the most, right? So I grew up with limited means. I grew up in the foster care system and had nothing. And I know what that feeling is like, that feeling of helplessness. So what Bitcoin is, and Michael Saylor has said this, is that it's hope for the rest of the world.
Yes.
Any outside of the United States and Western Europe, generally speaking, it's incredibly difficult to create wealth because if you put it in the local currency, it gets frittered away with inflation. If you put it into real estate, it can be easily taken from you. In Honduras, they were stealing beachfront property from people by literally going in and hand changing over the property documents to whatever official wanted to steal your house. In Argentina, the rate of inflation there and straight out state-sponsored theft of assets makes it virtually impossible to create wealth. So, and I'm talking about Bitcoin specifically right now. Bitcoin still, in my mind, is one of the most secure, purest ways to build wealth the world has ever come up with. And yes, I understand it's trading for $65,000, $66,000 a Bitcoin. It's worth over $1 trillion. But I want everybody watching today to understand that I envision a world where Bitcoin could be worth $100 trillion, right? $50 trillion. I think within 5 years, Bitcoin's $500,000 a coin. Even if you're just dollar cost averaging, taking 10% of your weekly pay and putting it every week into Bitcoin, it can give you that rung on that ladder, on that property ladder of actually creating wealth. And 30, 40 years ago, it was a lot easier to create wealth because you could get for instance, on the property ladder.
Yes.
Now try getting on the property ladder in London, Hong Kong, New York City, LA, Miami. It's virtually impossible unless you're already wealthy, have wealthy parents, or you're an exceptionally good salesperson and are able to raise money in some type of private offering. But I'm talking about for the average everyday person, that ability to create wealth, it's disappeared. And what I'm most excited about with crypto assets is that it helps the average person develop a measure of wealth and store their wealth in something that I believe over time will outperform any tradable asset that they could put their money in.
I concur. 8.9 million% in 10 years. Nothing has ever come close to that before. So I definitely agree. President Nayib Bukele of El Salvador gave each and every citizen $30 in Bitcoin in their Shiba wallet. So you said, I remember you distinctly saying capitalism cannot be on the way up and it cannot be welfare on the way down. Do you, right, in order to appease potential uproar and assuage heated national debate in a few years to come, do you think our government should kind of perhaps pay people in Bitcoin as opposed to just printing stimulus checks? I know this is probably the reason for saying this is in the next 5 years, some people who hold Bitcoin right now, you mentioned the likelihood of it going to $500,000, and that's true given all the calculation we've seen from Plan B and as well as his calculation and other people as well. If that happens, you're going to have trillionaires that we've never seen before in the next 5 years. what would essentially happen would mean the wealth divide will just widen, and people who are on the economic social ladder, which is on the bottom side, things get worse. So do you think the government should do something about that?
Oh, but
Because
let me just,
once Bitcoin gets to its full potential.
yeah, I just want to clear up one thing. Yeah. What I said was, you can't have capitalism on the way up and then corporate welfare on the way down.
That's true.
Right. So what's happened in America is that you've had a very permissive regulatory environment, which has allowed banks and financial institutions to make an enormous amount of money.
Yes.
Well, okay, that's the capitalist system. But when they get in trouble, you can't then go subsidize them. You can't give them corporate welfare, because that's not capitalism. That's crony capitalism. And that's what I was railing against. The beautiful thing about the capitalist system is you can go take risks, and if you're right, you can get very rich. But if you're wrong, you can lose everything. That's the nature of the capitalist system. And in the last 20 years, that has fundamentally changed in the United States. This idea of being too big to fail is insane. If a company's too big to fail, it should be broken up, period. If a company can bring down the entire United States, that in my mind is a bigger domestic risk than a five-man terrorist cell somewhere in Brooklyn. Because when you think about what happened in 2008, the millions of people that lost their homes, that lost their savings, the human misery that was wreaked upon this country that I love, and they parade it around as capitalism. That's not capitalism. That's crony capitalism. Now, on the other side of things, just giving people free money, I can't get behind that. Universal basic income. It's just, look, we had universal basic income in the United States for the last 18 months. And what happened? People stayed home and they stopped working. That's what happened when you have universal basic income. And the debt in the United States has blown up tremendously. And people think that there's no cost for that. Well, look at the price of everything around you. Inflation is the cost of universal basic income. And that doesn't hurt me. That doesn't hurt you. That hurts people that operate at the margins, minimum wage people. When I came to the United States, and this is, I'm going to get off on a bit of a tangent here. Okay. Minimum wage was $4 an hour, but I was getting paid $7 an hour, which was a living wage then. A pack of cigarettes was $1. Do you know how much a pack of cigarettes in New York is now? $9, right? Gas is $4. Gas, I think, was maybe 80 or 90 cents. So yes, there's huge inequalities that have taken place. I will say here unequivocally, rather than handing out checks, the minimum wage needs to be exponentially higher than where it is right now. When I came to the States, I was 16, I had $150 in my pocket, but I was able to work enough minimum wage jobs. I had an apartment, I had food, not much, and I could get to and from work. Well, you can't do that now on a regular minimum wage job. You've got to work at least 2 or 3 jobs to be able to do that. And what that does is it creates an economic underclass of people that can never escape their economic prison that they're in. They can never get beyond that. And so this is why I think having a higher minimum wage is incredibly important. Not that you should spend your whole life at a minimum wage level, but you need to be able to get on that first rung. So maybe you can have enough money where you can maybe go to night school and you can learn something, or you can, in my case, I could save up enough money and get some better clothes and then go on better interviews and things like that. These little things can make a huge impact in people's lives, especially at that level, when you're at that minimum wage level. And I was there for years at that minimum wage level.
I know you have a lot of following online. Hopefully someone from the government, one of the constituents is watching, and they will be raising minimum wage. Hopefully, we'll keep our fingers crossed. Last week, SEC Chair Gary Gensler, he gave the green light on Bitcoin futures ETF. What are your thoughts in terms of the Bitcoin futures ETF instead of a pure play Bitcoin ETF?
It's horrible, terrible. It is a capital destroying nightmare, octopus Frankenstein product that could only have been cooked up by regulators. Do you want me to go on?
That is a vivid description I've never heard before, but yeah, please proceed.
So here's what's going on with the regulators. They hate Bitcoin. You know why? Because Bitcoin has hit $1 trillion market cap without any regulators, without anybody telling you must own it, without anybody giving you any advice, and without any middlemen, right? Other than Coinbase and Kraken and things like that. Yeah. And so Bitcoin represents economic sovereignty, which has never existed in human history. Whether, when we were in the periods of kings, the king was the one who had his face on the gold coins. Even if we were in periods of tribal times when there was no money, resources were being dominated by whoever the tribal leader was. So here we now have this form of asset that nobody else owns and controls and can direct. And so, of course, governments are afraid of it, but you can't just go and ban Bitcoin. Look, China has tried to ban Bitcoin numerous times. It does not work. It's like trying to ban the internet, right? It's the genie is out of the bottle. And so what they're trying to do is they're trying to move price discovery of where and how the price of Bitcoin is discovered onto regulated exchanges. They want to have that control over the price of Bitcoin. They want it to occur in the futures market, not in the spot market. So what's a spot market? The spot market is the physical market where we actually buy and sell actual Bitcoin. In the futures market, they're just betting on the price of Bitcoin. And at the end of the day, when they settle up the difference in cash. Whereas a spot settled futures contract will settle up in actual Bitcoin. So here's the problem with a futures-based Bitcoin ETF. When you buy futures, you buy what's called the front month. And that's the month where there's the most amount of volume. Now, every month, sometimes it's every 2 months, you've got to switch from the contract you're in, the front month contract, to the next front month contract. Well, what happens every time? It's like, imagine I'm in a house, okay? I think the house is going to go up, but I got to sell it every 60 days. I have to sell the house every 60 days and then buy it back. That's essentially what goes on in the futures market. Think about all the costs that are involved in that, the trading costs. And then generally speaking, the next contract is going to be a slightly higher price than the contract that you just sold. So you're compounding your losses. What you're hoping is that the value of the house will rise faster than the transaction costs. And that's what people are hoping for in a Bitcoin ETF. But look at any of the commodity ETFs that are out there that use futures in order to track the underlying. Look at USO, which tracks oil. You can see it diverges dramatically. You know why? Because you can't overcome that negative yield that you get every single month from the transaction costs. It's projected you could see negative yields of 10% a month in negative roll yields on this product. Yeah. So that's a product that is designed to destroy long-term capital. So I would say if you're a short-term trader, you trade between a day and 30 days, sure, you can go use that futures product. And the advantage is it'll give you a ton of leverage and it'll have a ton of liquidity. But if you're looking to get long-term exposure to Bitcoin, which everyone on the planet should have, just for the love of all that is holy in this world, please do not buy that product. It's awful. Just go buy some physical Bitcoin or buy GBTC, which actually holds Bitcoin and it's trading at a discount to the Bitcoin that it owns. Do that, but do not buy this product. It's awful.
Okay. A yes or no question. Do you see Bitcoin flipping gold at $11 trillion market cap? And if it does, when?
Within 5 years, absolutely.
Okay.
It will demonetize gold in a way that will leave gold bugs shocked.
Okay. When Bitcoin eventually hits around 300 to 500,000, will it address curb or perhaps halt excessive QE? Or is it going to be decoupled because of the small fraction of the population that are holders?
No, it won't stop QE. There's nothing that Bitcoin can do that will stop QE. QE won't stop until people stop buying government bonds. When the market for government bonds completely collapses, when they say, okay, we're not going to lend you money anymore, and then now the Central Reserve basically has to print all the money to buy all the bonds that are being sold, then people will realize what a sham fiat currency is. And you'll see fiat currencies just absolutely collapse in value relative to Bitcoin. And it will take that to happen before they start ratcheting back QE. Here's something that I've learned over the last 30 years, is that always bet on governments doing the thing that is the easiest thing to do until they can't anymore, until everything blows up. And the easiest thing to do is hit a button and print more money. And they will continue to do that until the market won't let them do that anymore. And when does that happen? I don't know. Japan's been printing money for close to 40 years now, and they're still running. So I think it's a bad bet trying to figure out when that will be. I think you're better off just go buy some Bitcoin and go enjoy your life. And that's the best hedge that you can do.
That's true. Michael Saylor, as you mentioned previously, he's managing his treasury by going into Bitcoin, and a lot of other maybe not a lot, quite a few CEOs, about 20 of them have joined Michael Saylor. So a lot of companies, big corporations, are now withdrawing away from government bonds and shifting into Bitcoin. So I guess we're going to see more of that to come soon.
Yeah, but corporate buyers aren't huge buyers of government bonds. Sure, they buy a bunch, but the big buyers are the pension funds and the insurance companies and other sovereign wealth funds. Those are the big buyers, and they'll be the last to give up on buying those bonds because of the very strict charters that they have. Insurance companies, it would take a very bold insurance company indeed to say that we are going to move our reserve assets from treasuries to BTC. They'll be able to move a small amount of it, but without their charters getting rewritten, that's not going to happen anytime soon.
This is a wild and outlandish question, but let's just put it out there. When Bitcoin hits 300 to around 500,000, which you mentioned, from a macroeconomic perspective, and reducing the US debt, which is trillions of dollars, that means the government might be able to pay Japan, China, UK, the big three who hold US debt. Do you think it's possible that the government, with its own stash of Bitcoin, and once it becomes a reserve currency at some point in time, which I believe it probably will be, do you think this will be a way of governments settling debts? So a lot of countries, as you know, own US debt. Can we start using Bitcoin to settle our debts instead of US coming up with $10 trillion to pay all of the countries who own our debts?
I don't think the US government is in the business of hodling BTC. I know they have a bunch of BTC.
Yeah, from the confiscation of Silk Road.
Yes, from Silk Road. But my understanding of it is that a lot of that BTC is being held up from different charges and different cases that are stemming from that, and that once those cases are the charge, the people that have been tried, then what they have done historically is just simply sell the BTC. They do an auction and they sell it. I think one of the greatest things the United States could do right now is make Bitcoin mining a national imperative and diversify part of our assets, strategic assets, into Bitcoin. It would make America by far the most powerful country in the world economically. Be above and beyond. I mean, we're powerful now because we have the reserve currency and we can print. But imagine having a $10 trillion reserve of Bitcoin. Think about what that would do for the strength of the dollar and the strength of the country. Now, again, you have to remember that the people that are in positions to make those kind of decisions grew up in a centralized world where everything took place in the physical world. So that person who can rise enough in power to make those decisions is probably being born now. So maybe maybe at the end of our lifetimes, we'll see that person move into power and maybe enact that, but it's doubtful that we'll see it within the next 30 years.
That's something to watch out for. Mayor Francis Suarez of Miami, he wants to pay city workers in Bitcoin. Do you see that flying? And if it flies, do you see other states join in to do this as well?
I think, how you can make an allocation when you go to HR and they say, okay, how much of your money do you want to go into this, into our 401k?
Yeah.
I think if you gave every employee the ability to say, okay, tick this button and we're going to put 5% or 3% or 6% of your weekly pay into a low-cost Bitcoin fund, I think you could transform people's lives. Think about, over a 30 or 40-year working career, if even 5% of your income is going into Bitcoin, an asset that's been growing at over 100% a year for years. Let's just say it only grows at 30% for the next several decades. That's life-changing. That's like going back in time and buying Berkshire Hathaway in the 60s, right? When it was trading at 20 or 30 bucks, and now it's trading at 400K. So I'm all for it. Will he do it? Will he be able to do it? What will it look like? I mean, I think those are all important questions, but they need to be asked. And I'm really happy somebody's asking them and actually putting themselves out there to do this.
Aside from Bitcoin, what are your thoughts about Ethereum?
I love Ethereum. I've been recommending it since it was 9. I still think Ethereum is cheap and has a lot more to go on it. I know there are other competing blockchain development platforms that do things faster and supposedly better. I remember hearing the same thing in the 80s, 90s, and 00s when they talked about Microsoft and the Microsoft desktop software. What I've learned is that it's not always the best technology that wins, but it's the most widely adopted technology that wins, and the technology that has the most amount of developers. When I wrote that first report on Ethereum, what I said is that Ethereum, in my belief, was going to become essentially the Microsoft operating system of this era. It was going to be the operating system that everybody would build upon if they wanted to build blockchain-enabled applications. And that's come true, and I think that will continue on that path. It's not to say that these other projects, won't get traction, won't get value, but you'll notice that all of these other projects didn't start aggregating a lot of value until they built interoperability with Ethereum, right? Because Ethereum is the lodestone of liquidity. If you want to have a project and you want to have liquidity, you want to have buyers, you want to have sellers, you want to be able to create a market, you either have to launch it on Ethereum or you have to have interoperability with Ethereum. And Ethereum is kind of this mass. As it gets bigger, it just attracts more and more to it. So my bet is that Ethereum will continue to be the premier, preeminent place that developers will go to when they want to build blockchain apps.
Cool. By the way, for about 2 weeks or a week now, I have been checking out CoinMarketCap to see what's going on with Bitcoin. I was thinking in my mind, by the time we get to have this interview, Bitcoin would be at 65, but as we know today, it's well over 65, clocking $66,000. So that's just something to put out there. What other altcoins are you interested in, like, for the value which they create and perhaps the projects which they're working on, aside from?
Sure. I normally don't talk about coins outside of Bitcoin and Ethereum because I have 600,000 paying subscribers that pay me for my opinions and research on crypto coins. But I will talk about one coin that I think is very cheap. We've been in it for a long time, so I'm okay to talk about it. And just to be clear, at my newsletter, I only invest in Bitcoin and Ethereum for myself. I don't invest in anything that I recommend. So, which is just a very important distinction. So I would love to buy this, but since I recommended it, I can't. But I think Uniswap is criminally undervalued. at this price. When you look at the amount of trades that they that go through that protocol and that system and the ease of use, I think Uniswap should be significantly higher than what it is right now.
Okay. Are we in bubble mania territory right now? A crypto goods company called SoRare, a French company, just raised around $680 million, which puts it at a unicorn status. I have no issues with companies being unicorn status, but what happens is, if everyone is talking about what we're talking about today, other companies doing great and important things get left behind, which is unfortunate.
Well, that's true no matter what world we're in. I'm sure when the automobile was taking off, there were some other incredible companies maybe in the building space that didn't get the funding they needed. But that's the nature of how funding works, right? It goes to the hottest area of the market. And yes, I would say when it comes to private equity investing, we've been in a crazy bubble for years. But so long as money is cheap, and it is, that bubble will continue. The great things about bubbles is really some amazing technology and some amazing companies can be born from bubbles. And the way that I've always tried to make money from bubbles is by really focus on the players that I think will survive from one business cycle to the next. And that's why I went so heavy on Bitcoin back in 2016 and Ethereum. I analyzed them. I said, okay, yeah, there's definitely a big bubble going on right now. It'll pop, but when it comes back, who are going to be the survivors? So is there a bubble going on right now? I would say in crypto, it's kind of a rolling bubble. You know, Shiba Inu and Dogecoin. I mean, that's crazy, right? That doesn't make any sense. But I'm not going to get in the way of that train because the one thing I've learned about bubbles over the last 30 years is they can get way, way bigger than you can imagine, way bigger than you can imagine. But what I do is I focus on projects that I think can create long-term value, that are being used in the real world, that are creating third-party use cases with big blue chip companies that have vetted the project. And even when you do all that, you can still have a project go down 90%. So I wouldn't be necessarily so scared that things are getting bubbly because, like I said, a bubbly market can last a long time. But just you want to focus on places that are adding value. But in terms of private equity, yeah, that's nuts. I can't even $600 million just because they have the word crypto in their name is a little nuts.
Yeah, they have this cards which they do for Manchester United and some other big European football leagues out there. So I've just received the note which you sent. We were meant to end this at 6 p.m. Eastern time. And I heard you have been generous with your time, and we're going to go for another 15 minutes. Is that true?
Yep, that's true. That's true.
Thank you very much. We'll just have a few more questions and then we'll end this. So thank you very much for everyone watching out there. If you could possess one superpower, what would it be and why?
I would love to be able to sleep 8 hours a night. I would love to be able to sleep 8 hours a night. That to me, for people that can do that, that's a superpower. If I get 5, I'm throwing a party in the morning. I generally sleep 3 or 4 hours a night, and then I can't sleep anymore. So that would be my superpower, being able to sleep.
Wow. I can sleep 8 hours. I just never get to do it, and I never get to sleep much. So we're in the same boat with that. What else aside from crypto gets you excited?
I love collecting watches. I'm a lunatic for watches. I grew up in England, and like I said, I grew up in the foster care system, very poor. And I don't know why. I was always fascinated with watches, and of course didn't have the money to indulge that fascination. And then as I developed some wealth, being able to buy those watches that I lusted over as a kid, and then not all of them are expensive, but just to be able to have them, they're just a constant reminder for me of where I came from and and they're like trophies. They're like, oh, I worked hard and I was able to get this, and they're great milestones across the course of my life. So I'm a huge fan of watches.
Good. I'm now going to ask you about your Swiss mechanic brands that you collect. So we'll just move on to the next question. What is your idea of fun and relaxing?
I love boating. I live in the Caribbean. I live in Puerto Rico, which is a boater's paradise. And I love to go offshore fishing. And there's amazing fishing out here and great boating. So I like to sail, I like to powerboat, and I like to fish. Anything on the water, I'm ecstatic.
Hence the reason you don't get much sleep, I believe. Is there a book coming soon?
I am working on a book right now. It's funny that you ask. We are shooting to have it come out the first quarter of next year. And so watch out for that. That'll be fun.
Okay. Of course, we cannot let you go without the obligatory question, which is, what is Bitcoin going to be and Ethereum by the end of this year, December 31st? And what do you think it would be by the end of the quarter, by the end of the cycle?
Okay, so I think by the end of this year, we can see 100K Bitcoin. I don't think that's going to be too difficult to hit.
I don't think so either.
And I think Ethereum can trade between $8,000 and $10,000 by the end of the year, somewhere in that range, between 8K and 10K. Answering this question on the cycle is really interesting because generally speaking, the cycle ends, you would say we're 5 to 6 months away from the end of the cycle. But for the first time, we have institutional capital coming into this marketplace and coming into this marketplace in size. And institutional capital has a tendency to look through the cycle into the next cycle. And they start pulling forward those gains. They start basically discounting those gains ahead of time. So I don't think that we will experience a drop like we did, an 85% drop in the price of Bitcoin like we did through crypto winter. And I also think that this cycle will be a lot longer than the last cycle because the amount of new money that's coming in and the quality of the money that's coming in. The money that's coming in now is not scared money. The money that's coming in now, they say, okay, we're going to make a 5-year commitment to this asset. We're going to make a 10-year commitment to this asset. And we don't care what it does. Now, they're only putting 1 to 3 points of their balance sheet into it. So you put 1% of your balance sheet into something and it goes down 80%, you're not going to get fired for it, right? But when you run $100 billion, 1%, it's $1 billion.
Yeah.
It goes down 50%. No one's firing you. So what does that mean? It means that we could see this cycle go a lot longer than previous cycles, and it means that we could go much, much higher. So I want to be very clear. This is not a prediction, but this is kind of a thought experiment. Let's say I'm right. Let's say the cycle goes a lot longer, and let's say they pull forward from the next cycle, the next halving. Under that scenario, you could see Bitcoin hit 400K this cycle, and you could see Ethereum get pretty close to $40,000 a coin. And
the cycle would be when exactly?
Well, the cycle could lengthen out all the way to Q3 of next year, okay, right? If potentially, it all depends on the rate of adoption of institutional capital. Because remember, institutional capital. I'm not talking about hedge funds and traders. I'm talking about things like people that have to plan for the long-term planning. So that's insurance companies, large family offices, corporate treasuries, right? They need to plan for 5, 10, 15, 20 years in the future. If that money comes in size, then that money's not going to trade. It's just going to buy it, put the Bitcoin in cold storage, and go about their business, whatever it is, if it's drilling for oil or selling clothes or selling life insurance policies. And we've never had that buyer in the market before. And that has not been modeled into anybody's valuation model for Bitcoin or Ethereum. And that's exciting if that buyer comes in this cycle.
We've heard all the good news that you provided, a wealth of information today. Is there anything you'd like to leave our fans and audience with out there that are listening?
Yeah, I would say if you're thinking it's too late to buy Bitcoin, how can I put this delicately? That is a decision that could impoverish you. That you are wildly, wildly wrong if you think it's too late to buy Bitcoin. And you need to be open to that idea that you might be incredibly wrong if you think it's too late to buy Bitcoin. Everyone watching this should own some Bitcoin. Even here at 66K, 67K, 70K, 80K, 100K, just dollar cost average in. Make it a cornerstone of your wealth building philosophy and do it automatically. You can go to Vanguard, and I have no relationship with Vanguard. You can go to Vanguard and just have 10% of your pay put in GBTC every week or every month or every quarter and just automate it and just go about your life. It doesn't matter if Bitcoin drops 50% tomorrow or goes up 100% tomorrow. We're playing the long game. This is your life. That time will pass whether you buy Bitcoin or not. And so this one little decision you make today can move your entire course of your life if you make that decision. So you want to do it with Vanguard, you want to do it with Fidelity, it doesn't matter. Just set up some type of automated buy program so that you're automatically every single week or every single month getting some exposure to Bitcoin, and then just leave it alone. Go enjoy your life, build a family, build your life, build your business, whatever it is. And then let your savings take care of you. Let time do the heavy lifting. And I believe it will transform your financial life.
Yeah, that was so poetic in the nicest way possible. Well, the truth is hard to swallow, but you just gave it to us. Ladies and gentlemen, it's a pleasure. We've heard from Teeka Tiwari, one of the foremost individuals out there, foremost minds in cryptocurrency and in Bitcoin. It was a pleasure speaking with you. We look forward to connecting with you again in the future. Thank you very much for your time.
Thank you very much. Thank you for having me.